Today, September 15, marks the 15th anniversary of the collapse of Lehman Brothers, which led to over 3 months of chaos in global financial markets and practically seizure of all lending by banks everywhere. September 2023 is also the 10th anniversary of the Taper Tantrum, a slightly smaller problem perhaps, the Fed pulling out dollars that it had printed to solve the Lehman problem. The Taper Tantrum hit India harder than many other countries, taking the Indian rupee from 53.50 per dollar in end May to 68.80 per dollar in end August 2013. To understand what lessons we have learned from these two events and how they have changed both financial markets and regulatory approach to financial markets, I have with me two experts who saw this crisis literally inside out. Mridul Saggar, the former ED and member of the RBI MPC, who was in RBI at that time, now professor at IIM Kozhikode, and Sajjid Chinoy, chief economist, JPMorgan India, who I guess tabulated everything that happened from the outside. Gentlemen, thank you very much indeed for joining me. Mridul, let's first take the big lesson, work backwards as it were. Is it fair to say that ugly as the Lehman crisis was, the lesson learned 15 years from now is banks everywhere are a lot better capitalized, lot better safer? Mridul, I think you're on mute.
Okay. So I had unmuted myself.
Yeah, okay. Yeah, we can hear you.
Okay. Actually, the 15 years of global financial regulatory reforms have definitely strengthened the resilience of the financial system. But it's still a bit of unfinished agenda. I don't think we need to slacken on that. Clearly, the capital buffers, the liquidity buffers, the LCRs, the NFSRs, in terms of the TLAC in particular, ending the too big to fail, they are very important measures which have been taken. But I am a wee bit worried that the political consensus on these reforms is still lacking, and it is contingent on what might happen in the US in the next presidential elections. If we have survived the banking crisis, which was emerging earlier this year, it's essentially on the back of the global financial regulatory reforms. Okay.
We'll come and develop that point a bit. But Sajjid, to come to you, since you wrote about the great unraveling, Sajjid, do you think that it is, while the banks and financial institutions have been strengthened with capital buffers, would you say that it has led to a lot of inequality because the Fed just flooded the world with low rates and a lot of liquidity, and we are still paying the price for that? Okay, I think, Sajjid, we can't hear you right now. We will come back to you in a minute. Mridul, would you agree to that the manner in which it was solved by liquidity is a price that we are still paying?
Absolutely. Again, Latha, I think the unconventional monetary policies have gone too far, and we need to sort of see its unwinding. So these are not very standard tools as the West countries have begun to think. And these should be used sparingly in times of crisis and should be rolled back. In all fairness, Fed is the only central bank which rolled back the unconventional monetary policy after 2008 crisis. The ECB, the Bank of Japan have not been able to do that. So I have some sympathy for Fed on that. But again, I think it's a word where too much dependence is there on forward guidance, as if markets have, it's not the job of the markets to take positions on what might happen. So everything, all risks, the markets don't want to take now. And that's something we need to correct.
Okay. Mollycoddling of markets by regulators is what you're pointing out, being too beholden to markets. I think we have Sajjid back on the line. Sajjid, while the positive of the Lehman crisis appears to be that banks everywhere are better capitalized, would you say the manner in which it was solved by gushing out liquidity has created problems even up until today?
Latha, I agree. I think the implications of Lehman are far more profound and far more long-lasting and are impacting us even today. Let me give you three implications. I think one is that the recovery post-Lehman was very anemic, right? It took 8 years for the global economy to close its output gap and go back closer to trend level. And that economic malaise or stagnation actually, in my mind, helped sow the seeds for, deglobalization, secular stagnation was blamed on globalization in some quarters. And, this was the decade of Brexit and the US-China trade war. And I think those deglobalization tendencies got firmed up in that decade of malaise. The second lesson in my mind was the misuse of fiscal and monetary policy that you alluded to. Fiscal policy was inexplicably too tight. Structural fiscal deficits in advanced economies tightened between 5 to 10 percentage points of GDP in a decade. And that choked off the economic recovery and contributed to the economic malaise. Now, the implication of that was by the time policymakers realized in 2018-19 that fiscal had tightened too prematurely, the pendulum swung the other way. And the next time a crisis hit, which was the pandemic, fiscal policy overcorrected in the pandemic, and we're still paying the price of that from some advanced economies. The third implication, as you said, was, because fiscal was tightening and there was this economic malaise, monetary had to do all the heavy lifting. And once the zero lower bound was hit, this whole Pandora's box of unconventional monetary policy opened up. I would argue it had a really crucial role to play in 2008-9 to avoid the recession from getting worse or facing a depression. But what happened was, once this became mainstream, as Mridul alluded to, then monetary policy soon became the only game in town and began to substitute for more important structural reforms. So I think all of these three factors, the wrong choice of fiscal and monetary is still impacting us. It dictated the way policy acted in the pandemic. And I think part of the high inflation we're seeing around the world is because fiscal policy moved too aggressively, having learned the lesson that it was too tight after Lehman.
Okay, so I don't know if when history is written for this period, the fiscal policy will be blamed, just as we now blame monetary policy for the 2008. Coming to you, Mridul, go ahead.
A slightly different take from Sajjid on this one. And while I completely agree with Sajjid on monetary policy becoming the only game in town, I have to say that the counter-cyclical fiscal policies are the need of the hour. And that's not something we are doing, but that's something which actually helped the West actually give a larger fiscal stimulus at the time pandemic shock came. So you look at how Eurozone really rolled back the fiscal side, because if they hadn't rolled back the fiscal side, the fiscal gaps would have remained too large to give the fiscal impetus.
Okay.
So that's the limited
Fair
point.
enough. I mean, we'll analyze it more, but let me come to the taper tantrum. As Sajjid points out in his paper, in his latest paper, the taper tantrum completely exposed India in terms of a country at that time with a high current account deficit and its inability to immediately react to the coming crisis of taper. But now, although the tightening of the Fed was much higher, from May 2013 to August 2013, the Fed hadn't tightened so much. It had only said it will tighten. But this last 12 months, the Fed tightened all the way from zero-bound interest rates to 5.5%. But the rupee was as sturdy as ever. So do you think we learned the right lessons from the taper tantrum, Mridul?
Okay, see, the two events were very different. The taper tantrum and the current tightening was very, very different. So in taper tantrum, fragilities were very large. India was part of the fragile five. Clearly, the fiscal deficit was ballooning to 6% of the GDP. Growth was falling sharply from above 8 to more like 5% in that year. Inflation had shot up to 11% plus. Current account deficit had ballooned also to 4 plus. So the moral of the story is that one has to stay focused on macroeconomic stability, because without that, nothing can get done. The lessons of the taper tantrum were learned, and in the sense, the Fed has been more restrained in communicating the tapers, which it does, prepares the market now. In taper tantrum, I distinctly remember that Esther George was dissenting in each FOMC, and Powell was also taking the same line, but not dissenting.
Mridul, we'll come to that in just a bit, analyzing it nuance by nuance, but we have to wrap up for Bazaar viewers. The key lessons from our experts is that the Lehman crisis, grave as it was, it taught us that we have to shore up banking sector, in fact, lending companies with a lot of capital. That's a lesson learned. And from taper tantrum, India learned the very big lesson to keep fiscal deficit and current account deficit, basically your macros, under control. Valuable lessons that we will remind our viewers on the 15th anniversary of Lehman and the 10th anniversary of the taper tantrum. Going to a break, we continue with the conversation, but viewers can watch the entire chat later on in the day.